Greetings. In this short video, we're going to talk about a little something I like to call Emini futures flipping out. Perhaps I should spell it properly before we continue. Now, flipping out. What's that got to do with anything? Well, if you've been around trading any length of time, you've heard about the coin flip, right? The 50-50, the odds, the probabilities, all of that. Well, as we know, if you flip a coin 10 times, 100 times, or 1,000 times, statistically, you should get heads 50% of the time. Now that's unless the coin has a definable edge, something you could accomplish really by taking a file, filing down one edge of the coin, creating a definable edge. You could skew the results. You can actually cause a coin to come up heads more often than tails, or vice versa. When you go to Vegas, and I really don't like using gambling analogies, but this kind of an example seems to drive home the point pretty quick, because most folks, if you're over the legal age of 21, have probably visited a casino, if not Vegas, perhaps on one of the reservations near where you live. You have some kind of experience with gambling, okay? Now, when people find out that you're a trader, you know the response you get. Oh, man, you're gambling, okay? Well, if you don't have a definable edge, you've probably already found out you don't even get 50-50 results. Statistically, just as with a coin flip, if you just walk up to a chart, grab the mouse, click the buy or sell button, 50% of the time, you should have a winning trade, right? And 50% of the time, you've got a losing trade. That's where the definable edge comes in. And that's really what we teach here at CFRN, what we have taught for years, is how to develop a definable edge so that you're no longer subject to the random coin flip. Now, in the live training room, we use a range chart. Now, it's called a 4-tick range chart, but it's not a tick chart, because a 4-tick chart would just be too fast for anyone to keep up with. They could have worded it better, perhaps, but what that means, 4-tick range, is every one of these candles is exactly 4 ticks tall. Once this candle goes up 4 ticks, come tick number 5, it's going to generate a new candle. It's not tied to time. It's not tied to volume. It's tied purely to price. As price eases up, 1 tick, 2 tick, 3 tick, 4, well, that 5th tick is going to generate a new candle. Okay? And for simplicity's sake, when you first come in, our goal is just to teach you our primary trade setup, the one that we use to trade all markets and all time frames. Now, some will tell you that's just not possible, because different markets have different personalities. You can't trade crude the same way you trade soybeans or the S&P or gold. And I won't even argue the multiple personalities involved. We're not concerned with the personality. We're not looking for a date or a life partner. We just want to put on a trade that is both high probability and low risk. That's where our strategy comes in. That's where our indicators come in, because they help you to visually see when that high probability, low risk opportunity presents itself. Now, this video is not about teaching you our methodology or teaching you our strategy. When you do start with us, though, and if you're trading the S&P, this is what you'll use: 8-tick target, 8-tick hard stop. You always must use a hard physical stop when trading. Otherwise, trading is simply gambling. We don't want to be gamblers, because we know how that ends. It ends with the hotel building another floor, and you going home back to the job swearing you'll never do that again, until 3 months, 6 months, 9 months later, and you find yourself back doing the exact same thing. And if you come back without a definable edge, well, the same effort will get you the same results. The reason these hotels or these casinos are able to build the fancy hotels with the bright lights and the free cocktails and all of that is because they created the rules to their games. They built in a definable edge for themselves. So they're not concerned with each individual hand that's played at a blackjack table, because they know the rules they've created have put the probabilities in the favor of the house or the dealer. Okay. Now, how do you change that? How do you fix that? Well, in Vegas, you don't. Because if you figure out a way, that's called cheating. And when they catch you, they will politely escort you outside. Back in the day, they would escort you downstairs first for a sound whooping. Then they would throw you out front. Things have changed a bit. Okay, so 8-tick target, 8-tick hard stop. For the purposes of training, that works beautifully. Now, if you happen to be trading gold or crude, you're still going to risk 8 ticks for simplicity. In the S&P, 8 ticks is $100. It's $12.50 per tick, 4 ticks to a point. So $12.50 times 4 is $50 per point. 2 points equals $100. So each time you put on a trade, you're risking $100 to make $100. Again, that is for the purpose of teaching you our strategy and our methodology. Now, what you'll see in the live training room, Michael, who has much experience in the markets, he will trail his stop loss. He will lock in profits as price moves higher. And when possible, he will take more than 8 ticks or 2 points out of the S&P 500. So I'm going to walk you through a little exercise. This is going to be real quick. Won't take long. But I want you to take a coin out of your pocket. Get a pen, a piece of paper. Okay? This is going to be quick. Won't take long. However, if you actually participate in the exercise, it will be meaningful. Now, you've heard me say before that trading is not a spectator sport. It is not. If you're going to learn how to trade, now, there's 2 things. One, you can simply trade someone's alerts, whether they're ours or someone else's. You can do that. You might even be successful at it and never have to really learn how to trade. But of course, what happens if someday that guy stops showing up for work for whatever reason? You're right back at square one, right back where you started. That's why what we do is, while we do show you examples of both profitable and unprofitable trades every day in the live training room in real time as they happen, we also have the alerts. which you can trade in SIM until you become consistently profitable. But the goal is not for you to just shadow Michael or to blindly trade the alerts that we put out in the Telegram channel. We want you to learn how to do what we do. We want you to be able to see what we see, think the way we think, which will lead you to instinctively taking the same actions that we would take under any given set of circumstances or conditions. Now, we all know the pain of being stopped out. Nothing worse than waking up, you feel refreshed, you got high energy, you used your new body wash when you showered. I mean, life's good. You sit down in front of the chart. Here it comes. Here's the setup. It's textbook. Bullish cross. Price pulls away. Price pulls back to physically touch. You get an up close. You go long. And it's a beautiful day. But we all know that not every day and not every trade lays out that way. The setup can be textbook perfect, but there's no guarantee that price will reach the target before it reaches the hard stop. And yes, it feels like a billy goat just kicked you in the belly. And then you shake it off, because that's what we teach you. You gotta just shake it off. Because once you learn the strategy, then it's just a head game, right? I mean, once you understand the definable edge and are able to deploy the definable edge, then everything else is just noise between your ears, right? Okay. So you put on your second trade. It's textbook as well. And you get stopped out again. Whoa, wait a minute. If I was simply doing a random coin flip, I would expect better results than that. How's it possible? How is it possible that with this fine-tuned, highly effective, definable edge that I've learned, how could I possibly get stopped out twice in a row? But, I've seen it happen to Michael in the live training room, so by golly, here comes setup number 3. From a statistical perspective, this one has to be a profitable trade. I mean, it has to be, right? Unfortunately, no. Even though you just were stopped out unmercifully, 2 times back to back, this third trade is a standalone entity. It doesn't realize that this trade setup, number 3, doesn't have any way of comprehending that you've already been stopped out twice. So it has to, skew things in your favor. No, it's 50-50. Every trade without a definable edge, 50-50. Every flip of a coin that hasn't been tampered with, 50-50. So what's my point? To teach you about our definable edge? No, not in this video. In this video, we're going to do something a little different. Now, you got your coin. Get a coin, pen and a piece of paper, okay? And we're going to use a virtual coin flipper to flip some coins. Now, let's go find our virtual flipper. Now, on this virtual flipper, and I'll include a link to it in case you want to use it, but seriously, if you'll do this with your own coin, write down your results. It'll leave a lasting impression. When I go to the next page, an image of a coin appears near the top left corner of the window. To flip the coin, you click on the image. To flip it again, click it again. The actual and the expected results are shown in the bottom half of the window. You can choose to see just results for the current session or to see historical results going all the way back to June 1st of 2003. Every person that's ever come to this web page, that's ever flipped this virtual coin, it's all been statistically recorded. The results are updated after each flip. To automatically flip the coin multiple times, you can enter a number into the field to the right of the coin and then click the auto flip button. The program automatically performs the number of flips you specified and updates the displayed results. If you enter an especially high number, it's going to take a while. Okay, that all makes sense, right? So, let's go to our flipper. Here's coin. I've got it set on 1. And I'm going to refresh the page. And I'm going to put it on session. I'm going to put it on 1. Now, on your piece of paper, make 2 columns. 1 heads, 1 tails. Okay. We're going to consider heads to be a profitable trade, and we'll consider tails to be a non-profitable trade. Okay. Now, again, if you're trading gold or crude with us, 8 tick hard stops, $80. If you take 10 ticks out of the trade, that's $100. On the S&P, 8 ticks is $100. The goal of what we're teaching you in the live training room each morning is a definable edge that allows you to take $100 per contract out of the market on a daily basis consistently. And of course, everybody goes, I can't live off $100. We understand. However, if you can become very proficient at taking those 2 points out of the market each and every day, over time, what will happen is you'll increase your account balance by $2,000. When that happens, our blueprint gives you the green light to add a second contract. Now, those same 2 points are earning you $200 a day instead of $100. Following the blueprint, it will tell you, if all goes well, when you should add your third, when you should add your fourth. Pretty soon, if you find yourself at 5 contracts, well, that $100 a day is now $500 a day, but it's using the same 2 points. So the question is which is more achievable, more points or more contracts? We believe the answer to that is more contracts. On any given day in the S&P or any other market, the chances or the probability of the market handing you multiple $100 opportunities are much greater than the market handing you multiple $500 opportunities or $1,000 opportunities. Now, I said we use 8 ticks as a hard stop on every single trade. And initially, you'll use a $100 target, no matter which market you're trading. But we're going to skew those results just a little bit. Not much, just a little. Okay? And we're going to use the S&P as the example. So on the S&P, every time you come up with a heads, I want you to write $300 in the heads column. Now, when the coin comes up tails, I want you to write $150 in that column. You've all read the psychology books about trading, and there are many different ways to calm the noise in your head, to divorce yourself from your emotions. You've heard that again and again. The best book ever written on that subject, as far as I'm concerned, a friend of mine who has passed, Mark Douglas, wrote the book Trading in the Zone. And that book was a real game changer for me. It really made a difference. I don't know if I'd be making this video for you today, many years later, had I not, at the insistence of Michael and many others, I finally broke down and read the book. I resisted reading it because I was told there was no charts, there was no indicators, there was no strategy, no methodology. And so I needed something that would make me money today or tomorrow morning at the latest, because I needed to make some money, right? So I put it off and put it off until it was like my endeavor of last resort. I got the book, I read the whole thing cover to cover in one day on a Saturday. And it really did change things. So again, I know you got your paper ready. You've created two columns, one with an H, one with a T. Give me 1 second. All right. You got your paper. You got your coin, right? Doesn't matter if it's a quarter, a nickel, or a dime, just so it's got a head and a tail. I'll be auto flipping, but I want you to experience the physical flip. Every time it comes up heads, you're going to write 300 in the column. And every time it comes up tails, you're going to write 150. Okay? Or if you label them, you can just put an X in each column. Let's see what happens. So, a quarter, we got no results yet. We're going to flip it one time. You can make it 1,000. And we'll do something with a big number here in a minute. Auto flip. It came up tails. So you see down here, out of one flip, we got tails one time. So in trading parlance, your first trade of the day was not profitable. Let's flip it again. Well, maybe there is something to that 50-50 after all. We got a heads and we got a tails. Let's flip it again. Another tail. So we've been stopped out twice, had one profitable trade. There's another heads. That brings us back to the statistical average. 2 out of 4 came up heads, 2 out of 4 came up tails. There's another tails. Another heads. Another tails. Another heads. We flipped 8 times. We're going to stop at 10. There's another head. And there's another tail. Interestingly enough, that 50% ratio actually bore out the statistical average. I didn't rig the coin. That's just how it turned out. Now, Mark Douglas, in his book Trading in the Zone, he says that anytime you're working on a new methodology, a new strategy, or you're making any kind of change to your methodology or strategy, you must have a large enough sample size for the information to be worthwhile. You can't determine the validity of any strategy or any indicator off one trade or even two or even three. While it didn't happen here with the auto flip, we could have, out of 10 flips, we could have had 9 tails and 1 head. That would go against the statistics, but it's certainly possible. Mark says you need a minimum of 20 trades, minimum of 20, to be an acceptable sample size. So we're going to, okay, so we already know on this initial experiment, we hit the 50-50 mark. But let's just refresh the page and start over. And this time we'll use Mark's number of 20. And what this is going to do is it's going to, in the twinkling of an eye, it's going to flip that coin 20 times. What did we get? 12 heads, 8 tails. Well, what if we increase that to 200? .82% of the time, profitable trade. 48% of the time, non-profitable. Now that's without a definable edge. Let's add another 0. Now what are we looking at? 50-49. Is it possible to skew those results? Seems hard, doesn't it? Yet you yourself know that when you first started trading, before you had a definable edge, did you not end up with more unprofitable trades than you did profitable trades? Of course you did. We all do. Why is that? What is it about trading that skews statistical odds? Now, I think this website, I think it said it goes all the way back to 2003. So let's take a look at the historical results. This is how many times folks have come to this website and flipped this virtual coin. It's dead on 50-50. Is it rigged? Nope. Purely statistical. Now, let's go back to Mark's number, 20. And there we are. There we are again. So, since I can't get this thing to skew towards the tail side, and I wish there was a way to make that happen, but there isn't. On your paper there, I want you to write down that you had 6 tails and you only had 4 heads. Okay. I got a calculator in case you don't. If we were stopped out 6 times, $150 equals $900. Four times 300 equals $400. Your trading session of 10 trades produced a net result of $300. Now, again, we're basing this on not even having a definable edge. We're subjecting ourselves to the randomness of 50-50. And I even skewed it in the direction of the non-profitable. Okay. So again, $300. Well, hey, not bad, but you need more than that to make a living. Once you become consistently capable of taking your $200 or your $100 or your $150 out of the market on any given day per trade, as you add contracts. Now, it's real important to understand that first contract that you go live with. In fact, our methodology, our blueprint, we want to see you do 10 consecutive days in a row where you reach your goal in 10 trades or less before you go live. Once you put together those 10 consecutive days in a row, the blueprint gives you the green light to go live with one contract. With that one contract, we want to see you increase your account balance by $2,000. Now, when you add your second contract, at that point, that's a big day, because you're not adding that second contract with your savings. You're adding it with actual profit you earned in the market. That's a big deal. It's a big deal because you're now building a trading business. You're not gambling. You've shown yourself by putting together the 10 consecutive days in a row that allowed you to go live, and then trading that one contract, the daily goal of $100 or maybe $150. You've increased your account balance by 2,000 by any measure in any industry. That is success. Going forward, every contract that you add going forward is added with profit you earned in the market. Now, if there comes a day, and there will come a day, where you have 2 days back to back that you don't reach your goal in 10 trades or less, that's where you put the brakes on. You go back into the simulator, which is not a walk of shame. It's the sign of a smart businessman. Because 2 days in a row, back to back, where you don't reach your goal, something's up. We need to get to the bottom of it. What's up? So you go back to Sim, and then you book a mentoring session with myself, Michael, both of us. As a CFRN partner or passport holder, you have unlimited access to one-on-one mentoring sessions with us. Not to mention, you have around-the-clock support in the Telegram channel. So you hit a rough patch. You were doing good, man. You worked your way up to 5 contracts or whatever the number is, and then it happens. Okay? So you go to Sim, you book the appointment, we show up, and we walk through with you You can see our screen, or we can flip it around. We can see your screen, whichever you prefer. And we walk through every one of the trades that were a part of you not reaching your goal. We dissect them, just like back in grammar school. They taught you how to dissect sentences. Well, we dissect these trades based upon the methodology and the strategy that we teach you and the indicators that we use. Our goal is to find out if there's some part of the methodology or strategy that you didn't quite grab a hold of. And I'm going to tell you, our methodology is simple. In fact, we had someone last week who had been with us years ago, and then he left, then he showed back up, and these are his words, not mine. He said, the reason I didn't succeed with you guys before is because I just couldn't accept the simplicity of your methodology. He, like most other traders, had been involved with, all sorts of methods that use some pretty complicated, often convoluted methodologies with just a slew of indicators and oscillators, just measuring this thing and that thing and the other thing. When at the end of the day, whether or not the next tick on that chart, I don't care how much stuff you've managed to put on the chart with it, how many magnifying glasses you have, studying every possible thing going on in the world that could affect it. The next tick on that chart, there's a 50% chance that it'll be an uptick and a 50% chance that it will be a downtick. In Genesis, when God created Adam, he did not give him the ability to change the past or to know the future. And those two things are inextricably linked for eternity. Right? Right. I know you've been to websites, probably where you spent some of your money because, well, maybe they didn't come quite out and say we can tell the future. Certainly they gave you the impression that they could, and that so could you. Well, some amount of time and some number of dollars later, you came to the shocking realization that you still couldn't tell the future. And now you understand that they never could either. It was just clever ad copy. None of us, not man nor beast nor machine created by man or beast, can tell the future. What we can know through the use of technical analysis, basic, simple technical analysis, and some humble little indicators, we can tell what the next high probability move in the market is. That is a definable edge. When you can know with certainty what the next high probability move is, you now have a definable edge. You have now skewed the results. You have weighted that coin so that it comes up heads more often than it comes up tails. But again, the purpose of this video, not to teach you our method or teach you our strategy. If you want to learn that, you can by going to eminitrainingschool.com. And there's a little form you can sign up. And in fact, you can be participating as soon as tonight when the Globex market opens, if you would like. So, if your goal is $100 a day, that requires 2 points in the S&P. Now, our blueprint gives you 10 trades over the course of a day to reach that goal. And you think to yourself, well, wait a minute. If I got to take 10 trades to make 2 points, I'm losing money. Not exactly. Now, there are discount brokers out there where you can trade futures for, I don't know, $1, couple bucks a round turn or something. Now, those are discount brokers, and they don't come with a broker that you can have conversations with, that you can, talk about strategies with, that will log in and help you spot opportunity on the trade. No, you don't get that for that price. You're going to have a full service broker for that. And you know what? Even most full service brokers don't provide that level of attention. We got a guy. So, and if you go with our guy, we don't get paid for that. We don't earn a commission, finder's fee. We don't get a split of the commissions that you rack up. No, the reason we have a guy, or the reason we recommend our guy, is because we think he's the best guy. And of course, you'll be able to determine that for yourself over time. And it won't cost you anything. But that's another story. Emini trainingschool.com. That's where you go if you want to participate in the trial. Okay. So, it's a beautiful trading day. You get stopped out 6 times in a row. Pretty hard to come back to the computer, right? But you know that it can't just keep coming up tails forever. I mean, after all, you have a definable edge, right? So here's what I'm suggesting that you try in the coming week. Those of you that are already a CFRN partner, a CFRN passport holder, do this in SEM. Always do everything. When you make any change to anything, you make it prove itself in SEM before you put real money behind it. And if you're not willing to put it through the SEM test, then you really don't have as much belief in it as you think you do. What you have is hope. You hope it'll work. Well, okay. Hope's a good thing. It's not a great trading strategy, but turn hope into belief. Make it prove itself. So over the coming week, try this. You've been using, as we discussed, an 8-tick target and an 8-tick hard stop. Let me suggest that over the coming week, instead of risking 8 ticks, try risking 6 ticks. And instead of taking an 8-tick target, why don't you bump that to 12? A 12-tick target, just 3 points. A 6-tick stop loss, just 2 points. And see what happens. If you flip the coins, if you went along with the exercise, we're not changing a lot here, okay? We're dropping our stop loss by just 2 ticks. I'm sorry, that would be 1.5. So we're increasing our target by 4 ticks. We're reducing our stop loss by 2 ticks. Could you make this a 10? You could. If 8 ticks is $100, 10 ticks would be 125. And BS ticks equals $125. And on the risk side, we know that 8 ticks is $100. So 6 ticks So whether you go with a 6 tick stop loss, 1.5 points, and bump your target up to 3, consider a 10 tick target is not 3 points. 4 ticks to a point. A 12 tick target is 3 points. You can adjust it in that manner, or you could go with in our example where we did 10 flips and 5 of them in our original example, before I skewed the numbers up there. Okay. If you're taking 300 profit out of each trade, well, over the 5 trades, that's $1,500. And if you're risking 6 ticks, $75, that's $375. So if fortune favors you and you're able to reach that 50% statistical average, you see what a difference that might make? Now, we're not changing our rules. We're not changing our methodology, our strategy. We're not going to teach you to do anything different. We're going to continue to do what we've done. We haven't changed a rule to our strategy or a line in our code for over, 7 years, I think. Because you don't fix something that isn't broken. That's a rule you can take to the bank. If it's not broke, don't fix it. But in the coming week, now, maybe you're already sim trading with Michael in the room, so your simulator's tied up. You could probably do this with a little pen and paper. They called it paper trading back in the day. Paper trading has gone digital. But I want to know what your results are. Let me know at the end of the week by doing something as simple as decreasing your stop loss by 2 ticks and increasing your target by 4 ticks, or if you want to even them out, you could simply increase your target by 2 ticks. If you're going to take 2 ticks off the stop loss, add 2 ticks to the target. But I think, give it a shot. 6 tick hard stop, 12 tick target, 3 points. And feel free to update your progress throughout the week in the discussion group. If you're on the trial, you're going to have access not only to the alert channel, where you'll get the logic alerts and the concierge trade alerts. You'll have access to the discussion group. You'll have access to the weekly trading zones. We even have a channel called Breeze. And that's where we go when we just want to shoot the breeze about something other than trading. Emini training tool.com. All right. I got to run. Globex open here in about 7 minutes, so I'm going to be real busy. But hope to see you on the internet. Thanks for tuning in.